Namibia's annualized figures show that household debt has edged higher to 14.83% in October. This represents the highest annualized growth since January 2007. For more, we are joined by Daniel Kavishe, analyst at Simonis Storm Securities. Daniel, thank you so much for making the time to join us. Of course, that stat there quite worrying, the highest household debt level since January of 2007. What do you think is the catalyst behind this number?
I think currently what we're seeing is that most consumers are taking advantage of the low interest rate environment. This has spurred them to increase their appetite for mortgages in the sense that they will be buying more houses during this particular period. We've got increase in installment credit, which can be reflected by vehicle sales numbers that have been coming out quite robust as well during this same period of time. Additionally, also we have seen some increases in term loans, which is also an indication of consumers trying to take advantage of the current situation, not entirely sure of what might proffer in the next coming years in terms of interest rates. We've also seen aggressive advertising from a lot of companies which have promised to give consumers good deals in terms of ownership of property and leases and hire purchase schemes, which has also spurred into the psyche of the consumer to continue taking on debt.
In light of the decision today, Daniel, by the central bank to keep interest rates at 5.5%, what is your view on whether this is an appropriate and effective way of responding to the increasing appetite for debt by consumers?
I think you have to look at it holistically in this particular regard, with the fact that the repo rate has been maintained at its current levels could also be an indicator of other macroeconomic activities which might require the interest rate to remain at low levels. Of course, there may be comments or there may be a difference of opinion in result to whether an increase in interest rates would actually be the most efficient way of curbing the current household and consumer debt. But this particular stage, you have to factor in other expansionary policies which were previously put in by government, which require for there to be a low interest rate environment.
Let's perhaps look at government debt, Daniel. How does this compare with GDP?
Government debt has been growing significantly over the past couple of years. We're seeing that currently the ratio stands at about between 23 and 26% in terms of public debt to GDP, and this has been fluctuating during the course of this year. It's still relatively good levels in the sense that the government has managed to maintain it below its target, which is 35%. What it indicates is that the initial premise of government to debt finance as opposed to tax finance has actually borne results in terms of the GDP has actually grown over those particular period, therefore maintaining the ratio still below moderate and relatively good levels.
And on the private sector credit extension front, we're seeing a moderate easing with credit extension falling to 13.71%. What does this tell us about the state of the economy and the vibrancy of business? Mm-hmm.
I think off the back, this tells us that the current business environment is quite conducive. Additionally, it tells us that if you look at prospects for economic growth, there might be a lot of opportunities within Namibia currently for a lot of companies to take advantage of what's been going on with the country. We expect that private sector credit extension will continue to remain moderated for the next couple of months at these particular levels, and that in future that they might start declining when we see interest rates start curbing. But it'll be difficult to, of course, give a specific time as to when that will actually take place.
And Daniel, perhaps I might be catching you off guard, but an interesting story coming out of Namibia today that all foreign checks are to be discontinued. Has there been any communication as to the reason behind this specific decision?
Currently, I'm not aware of any communication to that effect. There have been some discussions which have been taking place, so it will be interesting to see what the fallout will be from that particular discussion and to understand what it is that the sort of impact it will have on the economy in a multiplier manner.
Daniel, thank you so much for those insights. Of course, that being a story that we'll also be following up on. Of course, that was Daniel Kavishe, analyst at Simon's Storm Security.